Hello, this is Matthew Cruz with Comstock Investments, and I'm going to be sharing with you today the USDA February crop report. So let me pull up my screen here so you can all share along. Okay, so should be able to see my slides now. Jumping right in, I guess some of the highlights of today's report was that everyone's looking at South America right now, and so they did increase the production from 110 to 112 million metric tons, so an increase of 2 million metric tons. However, that was offset by Argentina, which they decreased by 2 million metric tons, so they kind of canceled each other out. Last year, of course, Brazil's production was 114 million metric tons. And so we are getting closer to that, and I think as time goes on, you'll still continue to see that inch closer to this 114 million metric ton number. From my contacts in Mato Grosso, production is very, very good, and so I think you'll continue to see that number move a little bit higher yet. On the corn, it was a little bit surprising, perhaps, that they did not decrease the corn production in Brazil. They kept that at 95 million metric tons. CONAB, which is the Brazilian equivalent of the USDA, they actually reduced their production numbers to 88 million metric tons. And so that was kind of a big decrease. I think it's a little bit early yet, since they're still in the middle of planting their corn now, and so there's a lot of season left. So there's certainly reason to want to decrease it, but there's still potential to be able to reach this 95 million metric ton level on the corn. Moving on to the kind of world soybean production, that was pretty much stayed the same, this 98 million metric ton area from last month to this month. In the corn, it was more bullish that they reduced the corn ending stocks worldwide by 3.5 million metric tons, and they also reduced the wheat ending stocks by a couple million metric tons. This is the corn balance sheet, and the biggest change, or only change here, was that they increased exports by 125 million bushels, and so that decreased the ending stocks to 2.352 billion bushels over the 2.477 billion from last month. But it's still more than where we were at last year at this time, at this 2.293 billion bushel level. This is the March contract daily chart in the corn. You can see here that we have making some upward progress here. We did break above a small resistance here and a second one here, and so we're making some progress there. But there is some major resistance here that I like to see them break above at this kind of 368, 370 level, and get closer to this 200-day moving average. And so it does concern me a little bit that there's a small minor bearish divergence here, but it's over a short period of time. But that's kind of where we're at here on the daily chart. Looks a little better on the weekly chart. You kind of see that we've gone and tested this 20-day moving average for the second time this week, and we've held above that. And so you can see we made a lot of progress here on this weekly chart, and so hopefully we can continue to move higher and get closer to this 40-day moving average at 374. This is the continuation chart, so you can kind of see going back to 2014 what corn has done, and so we are on a rally here now at 365, although it doesn't maybe seem like it, but we are moving higher, and so I think we can get to this 375 area. But I think to get close to this $4 area, we're going to have to get some sort of help from weather, either in Brazil or Argentina, to kind of reduce the corn stocks. In soybeans, the soybean balance sheet, they reduced the exports by 60 million bushels, so more of a negative report in the beans. That increased the ending stocks to 530 million bushels compared to 470 last month. And so compared to where we were at last year, we have a lot more soybeans. And so not a lot of good news in the soybeans, unfortunately. We are, for the second day in a row, we're now above this 200-day moving average, and we went down and tested that support level again. So hopefully we can continue to stay above that. That would be pretty important threshold that we want to maintain. This is the continuation chart in the soybeans, and we're just kind of range bound right now between this 1005 area and this 968 area. Just kind of bouncing back and forth right now. This is the wheat balance statement here. You can see that biggest change was that they reduced exports by 25 million bushels. That increased ending stocks, so a little over 1 billion bushels, and slightly more than last month. And compared to last month, it's about, or at least, excuse me, last year, it's about 10% less, but it's still a lot of wheat out there, and so a little bit more of a bearish report. And the March contract responded by giving up a few cents today. Similar to the corn, there's a bearish divergence here. There was one in late December, and when that happened, wheat dropped about 13 cents. And so I wouldn't be surprised if you saw a pullback here down to the 20-day moving average level, but I think that would be a good buying opportunity if it came down to this level. So moving on, this is the week continuation chart, and you can kind of see we're up at these resistance level, and so we really want to stay above this 462 area if we can, and that'll give us a lot of forward momentum to keep going higher. But that's kind of where we're at now. We gave up a little bit today. This is the cotton balance statement. Really, the only change was that they decreased the exports a little bit today, and so that increased the ending stocks from 5.7 million bushels to 6 million bushels. And so not a lot of news, I guess, good or bad, in the cotton. And the cotton market did not really act like it cared, and so it didn't have much of a trading range today. For anyone interested in kind of spec trades, I've been following the oil market here for the last couple of months, and there's been momentum has been weakening here in the cotton, despite the prices been going up, and so it's really dropped off here lately. Yesterday it had a big down day that they found that more inventory in gasoline than what they had previously thought or what was expected. And so it's been, this blue line kind of indicates the support level in a channel that oil has been trading in. And so it's been making a lot of progress here, obviously, over the last 5 or 6 months. And then today, I would say, was the first time that it really traded below or closed below this channel line and this level of support. And so that I guess I would continue to look for further weakness in the oil market. So maybe something to keep your eye on. So just a quick rundown of everything what happened today. That's about all I have for you. I just want to point out some of the events that we have going on around Iowa. March 20th, we do have scheduled another webinar with Dr. Elwyn Taylor. We haven't started to advertise for that, but we'll send out some emails about that shortly, maybe in the next week or two, advertising for that. Those do cost $30 to participate. They're live webinars, so you can ask questions of Dr. Elwyn Taylor, and that also includes a follow-up webinar on the following day with David Cruz. So that is all I have for you today. So Thank you very much for joining us. If you have any questions, feel free to visit us at comstock.com or call the office at 712-227-1110.